Good morning, everyone, and welcome back to this session on options. Very excited to have you back, Dan. It's been a while, so I know you've been away for a little bit, but happy to have you back.
Hello, Fabio. Happy to be back, and we had a lot of things planned, and we have a lot of things planned, so stay tuned. I'm happy to be back for many videos this year and next year on.
Sounds good. So basically today it's gonna be about option trading and how you can use kind of data to sharpen your analysis and your edge. Today also we're gonna have NVIDIA earnings later. There's FOMC meetings. So there's a lot of things happening. So what we're gonna show you today is how can you prepare, how can you look at positioning, etc. So the first thing that a lot of customers have asked, like we have started sharing our data matrix and our file within our Discord community, adding some of the factors that we provide. So basically, if you come to the dashboard, you can access our Q score right here. You can access our string model, but then we made it easier for you guys to actually combine them together. So we've been sharing like kind of like an Excel file like this within our Discord channels. And basically the goal of this is to start basically filtering and creating kind of like some subsection of that data so that you can kind of filter out assets based on different parameters, similar to what a fund would do. And then you can kind of like get to a level where you can kind of combine and create very, very easily. And we have multiple videos that where we show this, how to do that. But basically you can kind of create different types of strategy where you start from the overall coverage of about 1,000 assets all the way down to 14, 29, 20, so which is a more manageable kind of universe. So we've created different types of strategies based on different criteria right here, and it's all done through kind of like this file. We have separate videos, so if you come to our guides and you come under backtesting, under swing levels, we have separate videos and documents where we show this. But now I think, Dan, what would be very interesting is like to start from here and see how you take data like this and then build your approach to kind of then drilling down to assets or ideas that you get throughout the day. I think you're on mute, Dan, sorry.
Thank you, Fabio. Yeah, I always try to mute myself so we don't have, you don't hear me double maybe or something, but now everything works fine. Yeah, I think you can see here, again, maybe not very beautiful looking list. I just put it in an online CVS viewer so we can stay in the browser and everything works flawless. So what do I do first? Which are the few fundamental things I always advise? You see my unusual flows. There are maybe on smaller momentum breakout cups, but if it comes to trading quantitative data and you want to trade more contracts and you want to make regular users of that stuff, you've seen amazing results, which Fabio has shown you. But if your account is like not huge, you won't be able to buy all these, especially not in the time when the market opens. So I prefer to sit down and stick to liquidity. And this is the first thing I did. I haven't even boiled it down to my next step, which is earnings. And we will talk about NVIDIA if there's time. But the first thing what you see here is a simple CVS, which has been boiled down to just include the S&P 100 as of today stocks, for a very simple reason, because they have normally two things. They have weekly options, which is very good because this approach here, which has been shown by Fabio, is based on a weekly trade. Yes, you can go out in time and do all the other stuff, but we are talking about weekly trades. And we want to harvest not only theta, we want to also play volatility in the right way, have beggar on our side. And the best thing is not to lose too much money over slippage, especially if you remember that if we use swing levels, we are not in the money normally, we're out of the money. So maybe we don't get that much money for the risk we take. But the good thing is, on the other hand, statistically, we're going to win this trade. So what I do, I boil down basically this very, very long list to the most liquid names. And you will see the first one is a good old friend, Apple, and everyone has traded Apple. We see Adobe, which had a rougher time. That's why it is marked bearish. This is just the first step. We always try to have continuity in what we show you here, and the next step is I haven't done it here. I will show you later how we can do that, and we will filter out, and this is easily done. You can do it on your own, or you do it with some AI, double check it, filter out the stocks which have earnings. For example, if we go down here, basically, and we will see in the row 72, we would see NVIDIA. It's in a bullish regime. Would I take the trade? Most probably not. Why? Because I'm an earnings trader. We had done some videos on earnings, and I've shown the ways I do some earnings, at least parts of it. And I wouldn't do a weekly trade on that, because if you have an earnings event, this basically is important for the stock. And it's not only the day and the week where the earning happens, it's normally pressure builds up 1 to 2 weeks out. So the easiest way you can do that is to filter out the trades and stocks which have earnings like 2 weeks plus in the future. So what does that mean? We would filter out this list and just leave the stocks which are left with earnings 2 weeks plus. Why is that? Because IV ramps up, which is not bad. If you have a long debit spread, it goes up. But in the end, everything points to the earnings. And this is not the environment where we want to trade quantitative on momentum, on the option score, and on volatility. Because there's a great Video Fabio did, and I got inspired by that. Basically, it's called trading like a hedge fund, mastering the Q strategies. And basically, this is a video where you basically can see how Fabio combines these things. I will switch to that in a second, and I will try to find the right here. So Fabio is backtesting the model, and if we go here, okay, we get some ads here. I've changed workplace, so very sorry for that. On this video, Fabio showed that. We will link that. The first thing is you start with a swing trade. This is the baseline, and he shows some statistics, but the video progresses a bit, and we will see in a second, we will see the Q scores, and this is what I do. We add the scores we got from the list. So basically, this is the basis, because I've been asked about that. If option and momentum is, you put them together, and this can be easily done in an Excel or in another file you use, spreadsheet. If it's above 5, this means I would lean towards a bullish trade. So buyer's trade. And if we have less than 1, the option and momentum, we would lean to a bearish trade. We can flavor this furthermore. Let me go here. With seasonality. And again, that would be the next step. If we have 5 and seasonality is above 2, that would give us confluence in a bullish trade. If we have less than 1 from the Q score, and which is the momentum and the option score, and we have seasonality below -1, this means we would take a bearish stand on that. In the list, most probably you will see, again, from the levels and from the swing model, where are we? Which is a very easy indicator. I like to double check and do confluence. This is just the way I do things. And this gives us nearly everything what we want. If I go back here, you will see a score for volatility. You see, I haven't mentioned that. If you want to keep it simple, you don't want to go into some other platform, you can use this. So if you have high volatility score, what does it help? We have repeatedly said that. High volatility means you can sell premium, and low volatility means that we buy a debit in the end. So we don't get a premium, we buy a premium. We look at NVIDIA. Why is the volatility score high? This is very simple. This is very simple because we have earnings, which are tonight. Everyone is working for NVIDIA again to save the market. Let's see. We will see that. Seasonality is negative. So in the end, we could put these numbers together and we would get a trade. But again, as I said, I wouldn't take the trade. So if you want to keep it simple, as the last fourth step, beside this video, I would add volatility. So if volatility is above 3, at least I would sell for a credit, and if it's below, I would buy for a debit, just to keep it simple. Yes, I know I do a lot of non-directional trades, which is also good. I have my own filters for when something is not clear, then I will be going non-directional, trying to harvest premium or to do time spreads, which are combined either simple calendars or double diagonals or other stuff. But we don't want to make it more complicated than it is. So basically, this is the first process, and then I will try to switch to something else just for you to get a view. I have created something for myself, which is nothing fancy. I hope everyone can see that. Can you see my toss screen, Fabio?
Yeah.
This is very simple. This is no magic. So as I said, I've just written some stuff. This is just some few scripts, but you don't need that. You have everything in MenthorQ. This is just the way I do trades. So basically, in the volatility score, you have all these stuff are already in. For me, this is the way I trade. And gives me some more confluence because at MenthorQ, you get all the data at the hand you need. But again, for me, I will factor these things in. So how does that work? The easiest thing is basically you look at the days to earnings. So if we go again to NVIDIA, would we trade that? No, I wouldn't trade that. I wouldn't even touch that. So I would be interested from Nike and above. Was probably even here in the blue. You see, I have put some colors in. I would be interested in JPM and above. A lot of possible trades, but would I be interested in all of them? No, because before, from the models we had, Fabio showed in trading like a hedge fund, you would already boil it down to very few exclusive trades. And on top of that, I would just lay basically the earnings. We already talked about that. I would lay the ivory percentile, which I always like. And for a second confirmation, I would take a look at the Z-score. So these things can be sometimes giving you mixed information. That's why I have added what Fabio also has for all the big ETFs, but you can find also for your stock, and we will look where you can find that. The VRP, I call it normalized or realized basically volatility. So for me, if it's green, I made it easy. I factored in some thresholds. I can easily see where I want to definitely be selling premium, because sometimes it's not that clear. Sometimes I will prefer to do basically a debit, even if indications are to a premium and vice versa. So this is just something for you to see. So even here, if you see that the ivory percentile is high, but the Z-score is barely positive, and normalized volatility is basically just 1. For PM, I wouldn't be most probably selling the credit. So this is something very simple, just for you to see. If you're interested in these kind of scripts, let me know. We can take a look at. So I will share my screen again, and we can jump in right into MenthorQ, if you like that, Fabio, or we can see if there are questions or other stuff about what we just talked about.
Yeah, I think we can go into the platform. Absolutely.
Okay. So the easiest thing what I will be doing is, give me a second. I posted some ideas based on that. So let's take a look at Adobe. I will open that. So without much further ado, everything is red. This is a bearish trade, and this stood out because the combination of everything Fabio showed us pointed to basically a bearish trade, and we were right to take a look at this bearish trade because a lot of things are happening with Adobe right now, and not all of them are positive. So if you had taken that trade on the opening, you would have seen that we would already be in some kind of premium. The first thing what I like to do before I post trades and other stuff, I always take a look at the options metrics. Again, we see a change in the DAX and in the GAX, which is pointing to some things. And you see here from the call resistance, yes, it's going up here, which is not a bad sign. But here also it goes up, but here we have a bigger dive. So this is a monthly expirations, and I always try to take a look at monthly expirations. Yes, they're further out. It's normal for them to be a bit, the expected move to be bigger. But this here basically indicates to me that the put support is dipping down. So this is something which again gives me confluence in what I just said. And the other thing is we will look at the models right away. Let me find maybe I was too fast. Where is my DAX? I had sorted that, but maybe not in the best way. Give me a second. She do a lot of stuff. Yes. I like the DAX because the DAX is good for directional trades, and we're talking more about going directional here. I said sometimes I will take from the list non-directional trades, but the model gives us some clear signs. And what do we see here? We have a lot of negative DAX here. It's very nicely done here. The DAX profile here, it's really on the outer side, and you can see like it's a big belly here. You can see this here. Yes, we have this call resistance here. We have the put support, it's 320, which, yes, the spot price basically is barely there. So what does that mean? If the put support is broken, market makers will and have to sell into this decline. And maybe if you are more adventurous and say, okay, this is what the model gives us, I believe the put support will hold. And we will also look into the GEX very soon, because the GEX levels, they act like magnets. And the DEX shows you what's going on with the market makers. The point here is that most probably, if we dip down there, we might stay there. But if we go below that, it will be very hard for the stock to recover above that. Is this something we want? If we have a bearish trade, this is exactly what we want, because basically our trade will be in profit. Again, we can take a look at the skew. First expiration we see here, it goes into the call buyers. It's also here, there is a normalization here. And again, here it is flat. So this is something which will tell me again to double check, because if we're going to in the call regime, maybe what we see from the models and from the DEX positioning, there might be a shift into that. That's why I love that MenthorQ has introduced the intraday data. We will take a look at that too, because before I open a trade and I want to trade quantitative, yes, the easiest thing is to look at the data when Fabio sends it out. You have everything laid out, you prepare that. But most probably I will wait the first 15 minutes. What is the market doing? Maybe wait an hour to see how intraday is, what kinds of shifts are there in the GAX, because it gives you a hint how the market is reacting to the open on Monday. Because we go back a step, these are trades we put on Monday and try to close in the end of the week. And another thing which is important, if you are selling premium, every day counts. So that's good. If our trade is going in a bearish direction, for example, for Adobe, we try to harvest as much theta as we can, squeeze it till the end. Could be a possible way, but I would advise everyone, if you are at 25% of profit, maybe take off some of the contracts. If you are at 50% of the contracts, take off more of these contracts. And if you're at 75, just leave some runners. So it's in the end, if let's say Adobe skyrockets, if you talk about spreads here and we don't talk about naked options, then the good thing is you will be playing with house money. So in the end, you might even be green, even if there's a big change. But I doubt that because, which has been very consistent, we always go back to the same things we advocate here. We will take a look at the swing model. So the swing model, basically here, the upper band is 48, 19. So this indicates this is most probably when we are closing this trade. We will have to go back one day because we opened that at some other point. We didn't have these data. I will go back. This is just for demonstration reasons. We know that most probably our trade will stay below that. So this is a good point where you want to try to find your break even. So let's go back. Fabio shared the information here, and most probably, correct me, Fabio, if I'm wrong, most probably the moment you share this data before market open, this is what I would be looking at, the data from Friday. Maybe I'm wrong, maybe I should be looking at this data, but I remember that this is the freshest data, and the data from the 17th is refreshed on the evening after market close.
Yeah, that's correct, yeah.
So I had this question with some users which were a bit confused, so that's why MenthorQ introduced the intraday, and we will take a look at this in a moment. So remember everything we looked at now. Let's go back to our 5-day swing model. 52, you see? So that would have been a point where we could have laid our spread, for example, or a broken wing butterfly, or whatever we want to do, a time spread. If we believed that with a nice diagonal, we would be ending up there. Are there any questions right now, Fabio?
No questions for now. Yeah.
No questions. Okay.
One of the questions that we always get is how do you combine kind of like the swing levels with kind of like finding ideas where you can get enough premium to justify the risk, right? Because basically, of course, when you trade kind of like out of the money options, so the statistics is there. So if you show the back test, it shows that basically the models are kind of correct in many of the cases. But how do you then narrow it down to finding companies where there's enough premium to justify the risk for the trade?
Yeah, this is the good question, because if we look here, let's say we would have put in our break-even point here, most probably we would get a risk 5 to get 1. This is very hard, and that's the thing. You can't have everything. What I would do in these kind of cases is there are two things. I either would take various trades. So let's say I want to have 10 contracts. I would, let's say, place 7 of them around here. So I would get 1 to 5. Most probably because my success rate is so high that most probably I'm going to keep the whole premium. If let's say if I'm selling for the sake of a premium, and then I would do something else. I would try to take a look in the levels here, try to find levels. So we have again the 50 here, the 60, the 70. I would try to find levels here which are lower, which are closer, which gives me more premium, but I would try to cap my risk. So in the worst place, I would go, and that's why we have the risk trigger here. Let's go back here. So we are here. two things you can do. You can either collect a little bit of premium here, and if you want to, let's say you say, okay, I believe the risk trigger, something is happening here, but most probably we have a rebuff. We know that at 320 we have the put support, which is closer to the money. You could go to a skewed iron condor, which means you would collect a little less premium here, which is very safe, and you would have here, let's say, more risk, but most probably at 310, because it's $10 out from the 320 where the put support is, you believe that the put support will hold. This is something where you could collect more money. What happens? Let's say we break down, we go down to 320, we go down to 310. How you manage that? I always think in various steps. It's not, yes, the easiest thing is put this up and let this basically go worthless, for example, or close very early for 50%. But you still have the high risk. So there are various ways to do that. The other thing would be to open something here or even at the 300, which is not that much. And if the stock, because this is what the model is predicting, that we will stay in that range. And if you see a decline, because this is what the data points to, you could roll down this year. You could roll it down on Tuesday, collect more premium, roll it down on Wednesday, but still keep the levels in mind, because you will see that what we saw here. I will show it to you again. Let's say we opened at 352. Today, what would I be doing? I would be rolling down. Let the model come back. I would be rolling down to have my break-even point here. Why is that? Again, the thing is, if I roll down, I would be collecting more premium. Am I confident that, let's say we saw the 310 is holding? Most probably yes, because let's go back here. Our closest expiration put support is again 320. So only if that breaks, I will have a problem with the iron condor. What do I do then? You can do various things. You can roll very close to this 320 from your 350 or 348 where you are, break-even point. If you believe we break below 320 or below 300 in the end, and we collect more premium. Or if you want to save that trade, you roll out in time. Where would you roll to? If we break the 320, next week the expiration 350. Again, you see here, this is stabilizing. If you want to be sure, you can roll out to the 300 out of time or below that. Does this save the trade? Not always, but it gives you more time. This is one of the things. There is basically, that's the problem. Premium or reward comes from risk. So if you want more risk, and this is the problem we are doing normally with these kinds of trades and the data, if we're using it, and we want to be very safe because we're advocating safe things here and using these data in an easy way, especially here with the levels of the upper band and the lower band, then the thing is that from this, you could basically, if you use these bands which have worked to perfection, then there's the way, only the way that you can't collect, let's say, one and risk only two. If you want to do it a more risky way, you could still say, okay, how can I collect more premium? Yes, I could sell a short strangle, let's say on the 350 and on the 300 without a security. Would that be wise? Yes, if you know how to use short strangles. If you are challenged, if your strike goes in the money, you can stay cool. You can add basically more contracts on the other side, or you roll down. You can even roll into a straddle or inverted strangle. But these are advanced option strategies. We can make a certain. I have a session planned out for these things. You have to be, first, two things. You have to have the buying power to do that, and you have to know what you're doing. With the levels of MenthorQ, you know what you're doing. So let's say, go back to your question, because I said a lot of things. I will open options strat. I'm not affiliated with them. We just use them for free. Everyone can, and we will go in here. We had Berghold spread, Adobe, and we remember that our close expiration already. We have lost 2 days, but for the sake of it, we saw here that the 350, roughly 48, was something we liked, and we so it's 7% up. But look at this. You have 6% credit and the margin is 250. Okay. The spreads are terrible. So again, liquidity. Even if we have a liquid stock, would I take this trade like this? Most probably not. I would be looking to find more liquidity here. So for example, the 45 is more liquid. Let's see. And I'm confident that this stock is going down. So again, you see here, okay, also the market is closed. It's very difficult to find liquidity. So that's the problem. And this is the good thing that we show this live. We have found everything. We have seen the trade. We have seen that this is a big company which has weekly options, and but we want to have the proper risk adjustment. So for the sake of it, let's go to the 45 call. And you see this, the spreads are really big. Okay, the market is closed right now, but is this a trade which I would take? Not right away. I would take only things up to maximum 10% here. And this is a thing basically where the risk you have is not okay for the credit you get. The other thing can do, if volatility allows us, we could switch and we could pay for that, because if the stock goes down in the end, that's okay. There are more strategies to do that, where you basically like do risk reversals and other stuff. If you're very confident that you will, basically that the stock will go down, for example, I will show you this in a second. Let's say we have a long put here, and we believe again that this stock will deep dive to the 320. Okay, we see here, this is very, very good. So this is 279 in debit. We need the stock to move further down. We know that here is the put support. That's why I chose that. What would I do to finance that? I would sell a call. And let's take a look here. So let's see it like this. Okay. Why do I do that? Because I know the put support is here. If I believe that the stock goes down, but it could stick there because these levels tend to be sticky, that could be something which is okay. But still, if the stock moves a bit higher, then I might have problems. That's why, basically, again, just to reduce my debit a bit, again, and this is the problem, the spreads are very wide here. We can do it with some other stock here. Basically, we need the stock to go down. And that's why, again, this is a very, very good example here. Maybe the model tells us something which is we have an opinion on, we see a trade, but if the liquidity isn't here, and that's why today, this is my fault, we didn't have the time to do a trade, to do a session when the market is open. Always the bid and ask are a bit worse in that time, but this is something you should judge. I always stop when the 10% normally is 10 or 12%, and this is my thing. So you would reduce the debit. This is something you could do, but this is something which is very risky, and this is just something which I wouldn't advise to do if you don't know what you are doing. Okay, Fabio.
Important than always look at the risk instead of the return, especially
Yes.
when you do sell options. And
yes,
very, very important.
Yes. So basically, if you want my opinion, the other thing which I do is, like I said, we can go back here again to the dashboard, which is very, very helpful. Before I open the trade, I will go to the intraday. So we won't see much here, but because we are not live, but you see how the DAX has changed. Say if we go here back to the intraday of Monday, you see everything is here laid out even in the past. You don't get that everywhere. So what is this pointing to? The intraday, we see a bit of positive DAX. We see here, the volume here is on the 350 on the call side. So this still here on the all expiration, we still see the big belly here, but we see the 400 getting hit more. So what does this indicate to me? This indicates that the stock is in a bearish, still the bearish narrative hasn't changed, but it most probably won't dive that fast down. So that's why you could think of a skewed condor. As I said, collect premium on both sides. You have time on your side, or you could do a double diagonal, which is basically combining vertical spreads on both sides with a time spread. Gives you safety, gives you more time, is normally for a debit, but you can close in the end of the week for a win. Why is that? Because if you do calendar spreads, you do it vice versa, but in the general, you sell the closer expiration and choose next week's expiration. Normally it's the same strike. If you move to another strike, it's a diagonal. And the aim is there that because the time spread is basically time hits harder for the options which are closer to expiration. These might go worthless, and the other ones further out, 1 week, maybe 30 days. That is the max I would do here. These are hit less. So this is something you can do nicely. But again, you see here two things, and I want to point them at you. We have the net DAX of the ODT is here. You see here, you still are getting hits on the belly. The volume is here, but I will take a look at the gags, and this is still the gags of all the expirations where you have the 320 here and the 400. These are the big ones. So because we are talking weeklies, I wouldn't be advising selling here the 400, something there's no premium there. But if I use these data to basically sell premium further out in time, this is something else you can do. I've done, but I haven't advocated it here in the Discord because we don't want to confuse people. The 400, 300, 320 or 300 are very nice areas for short strangles, and you can always roll out in time. You got all the data there. But remember, this is not an ETF. This is a stock. If there's a very, very good or bad announcement for that, you might be looking at something which can take ages to roll. We had this user in MenthorQ in the Discord, which I admire a lot, and he had been rolling some NVIDIA calls for ages, but he did it. So if you can afford it and you know what you're doing, then this is a good thing. Another thing I always like is the snapshot here, the liquidity snapshot whilst we're here. This gives you a very brief look what is happening, how is the DAX changing. So, and even you can see what happened with the DAX, so unwinding. So this is something which is good to know. Okay, Fabio, we still got some time. We could easily move to NVIDIA and the earnings if someone wants to take a punch or look at that, or we can deep dive more into the quantitative approach.
Yeah, I think looking at NVIDIA would be great then.
Yeah, so we have done a lot of videos on earnings. NVIDIA is something I wouldn't be trading with these numbers. So these are things which are interesting here, but again, we did some video on that before, how you can do it easily, non-directional. I showed the way how I do it. There was a lot of negative flow on NVIDIA. Seasonality is bad. You can easily see it here. You don't need flow, basically flow dashboard to see that. You can easily see the things in MenthorQ's dashboard. Everything is there in the end of the day. So let's say for the sake of it, tomorrow we had, not for the sake of it, we have the earnings tomorrow. So what would be an easy way to do that? Yes, you see here we have a lower band on the 5-day swing model. Make this bigger. We have here basically the lower band on the 20-day model. The easiest thing would be, yes, to be long and take a trade. Yes. Would you collect premium? You remember that I was showing this a couple of months back, earnings trades, directional earnings trade, because the IV is so inflated that even if you go here to these bands where you can sell things, you still get a very decent premium. We can take a look now at NVIDIA in option strat in a second. We are gonna leave Adobe to rest with its own problems, and for the sake of it, you see nicely it's so liquid here. It's beautiful. So let's say our break-even point was 168. Let's say we go here close or a bit lower. 68. Okay. So again, 1 to 5, but it's far better than the other. If you want to be safer, you could do this to this is 1 to 5, and NVIDIA has to dip till Friday again here. What will happen here? And this is the nice thing here. I will try to simulate this to you. I'm just trying to get my numbers. You see the implied volatility is 121%, so it's really, really inflated. And what happens on the day? The stock, there is a dip. Basically, normally the stock, whatever it does, it goes up, it goes down. It doesn't matter because roughly volatility will be cut in half. So we can go here to 60. I would even say to 50. So what did this change? Did it change the credit we got? No, it didn't change the credit. Did it change the risk, the margin? No. Did it change the risk? No. But basically, if I go back here, we need to wait till Friday to be safe. But because we have the crush of volatility here right away, even if NVIDIA dips a bit, we're in the green. So we have price action. So the price is going down. Yes, data is working for us in this kind of in this kind of spread. But the importance is this goes down. Will it go down with the market open? No. This is the thing which a lot of people get wrong. IV crush or volatility crush doesn't happen right away. And for each stock, there are metrics, there are other stuff, but normally it will go down a bit. Another way to play that would be to know how much NVIDIA has moved in the past. On the statistics, we did a video on that. So, you know, is this a stock which normally stays in its average range versus the implied range? The implied range is how much the market is pricing in NVIDIA to move right now. So basically, in the last years, NVIDIA had a rough movement of 8% in the last let's say 8 to 10 quarters, roughly, if I have it right in my mind, and it beat the implied move, these 8%, only I think 2 or 3 times, and the direction normally. I would have said bullish, but it's a flip coin. It was 50-50. We always think of NVIDIA so positively, but this was more of a flip coin 50-50. So it could go up, it could go down. That's why normally on earnings, if I can, I prefer to sell non-directional trades. So how could we do this here? First thing is that NVIDIA is not that constantly staying in the range, but for the last 2 years it does. So that would be a good way for a short vol trade. Why is that? If the market is pricing in 8%, this is what you pay or what you get for the options. So if NVIDIA stays in range, that would be very nice. So let's build ourselves an easy condor here. We can add, buy a call, and we can sell a call. And let's say we go to we had the 94 here. Okay. So this would be the iron condor I was talking about. So we get 97 credit, roughly 100, and the max loss is 150. This would be an earnings trade because IV is inflated and because we believe that this stays in range. If I go back here, again, if you do this trade and tomorrow you wake up to a move here to 5% or to maybe 3% or 4.6 or something, what it shows here, you will see only $7. This is not much. What did he tell me? But again, we have IV crush, so the chances are higher that you stay in range. So again, I built something close to the implied move, but a bit less. So if you want to be safe, you can even go further out, but it will reduce your chances. So look at this here. We cut this a bit down. So again, NVIDIA needs to move hugely here. So above 200 and below 160, which are very safe numbers from what MenthorQ is giving us. Again, here you see it here, 195, 168. So we are far, far out from that. So again, where did I get these numbers? The put support here, the general is 160, 200. This is the total exposure. And the closest one is 175. So as I said in many videos, the important thing is that these levels are of great importance in everyday trading. On an earnings event, the cards are laid out anew because you never know what will be announced, but the market after that rebalances and these levels try to get sticky again. So we will take a look at the DEX profile again, just to get an understanding, maybe where we have to manage the direction, where is it more risky. And the thing is, what you know, if you know these levels and NVIDIA breaks out of the 200 or below the 160, it might go back to that. It might go back to that because sometimes we see the dip and these levels act as magnets, but also as repellent. But on the other hand, if they break for real, then you know market makers will be forced to sell into that or buy into that. So what can you do? You can flip the coin, either leave the trade and go directional long, or you just have to roll out in time to a safer position. But you see here, this 200 is very, very safe. The 210 is coming afterwards. And here again, you see here, we go even higher. So the market is still positioned very positively on NVIDIA. This is just a very simple way of doing things. Let me see if I have some other things here I wanted to tell you. Basically, yes, normally two things to remember. It beats, normally the EPS is normally beaten. This doesn't tend to be always positive as we saw, and it has normally a gap up, 3% up and down at least. So this is something which you can factor in. For example, if you say, oh, we stay here in range and I will do double diagonals, which is not a bad idea on these kind of trades, just factor in that in the middle of it, I can show you in here in this here. something nice. You see, this is very nicely here. If we stay here and we stay here in, but let's say if you want to do a diagonal, we would need change expiration here. This is the thing which happens here. So in the beginning, volatility is here, but the moment volatility drops, we needed to move here. But NVIDIA is a mover, and this would be a more, let's say, a more risky play. But you see the max loss is 335, max profit is higher. Again, it's 2 to 1. And then we have arrived at what the things you can do. You have the levels which act as magnets. We know that. So we're probably not going to stay in the middle, except if they say we have nothing to announce, everything is fine and the future is bright, but some bad clouds are there. So it would stay and sag in. So this is something more experienced traders would do, or they would even go further out in time. Okay, that's for NVIDIA. Okay, Fabio, I don't know if there are any questions or something we can...
Done, and I think we have a few minutes left, so please let us know, guys, if you have any questions. So first of all, I want to share also something with you. Black Friday is coming, and we've launched our Black Friday sales. So we are on our early bird, and actually this is the best promo we have for the rest of the year. So if you guys are interested, I would urge to take advantage of it. It's available until Sunday, and then we're going to start our normal Black Friday. To access all these links, you can use the coupon code. You can use the QR code that we have here, or use the link, or send us a message at info@mentorq.com. So I'm going to leave it up for a few seconds, but basically, everything that Dan showed you today, you can access all the tools, our community, all our data models, and you can lock yourself for the next 1 or 3 years. So we have this amazing promo going on. And the thing is also, Dan, that we haven't mentioned about our AI tools. We're going to do it in another time. We are investing a lot of resources into new models and new tools for next year. So for 2026, we have actually some very, very big plans. So very excited about that. We're going to come up with some backtesting tools, some new models. We're going to come up with some earnings data, new things coming into our AI, and also a brand new app that will also get intraday real-time data directly for you guys. So very, very excited. So this is a really great chance. It's Black Friday. Everybody's been waiting for it. So yeah, please let us know if you have any questions. I think we've got a couple. If I am a member and I buy the deal, does it get added to my subscription? Yes, you can do that. Just send us an email once you do it, and then basically we'll take care of that. But besides of that, one other thing that we are going to have, and I wanna show it to you guys here. We have a lot of live sessions coming on over the next few days. So please come to our YouTube channel and check it out. Tomorrow we're going to be live trading with Patrick for about 2 hours. So we are going to do one of the live sessions that we do in our pro group live here on YouTube. So you can find it right here. Where is it? Sorry. It's basically here. We have our live trading. We have our NQ playbook. We have our session with Ryan. And then we're going to have some new exciting news about integrations on Friday. And of course, a lot of other things coming in next week. We'll be live with Diana and Anne-Marie from Top Step X, and more live trading coming next week as well. So a lot of things. Just come to our YouTube channel, go under our live session, and you can subscribe and get notified when the event is live. And then, of course, with you, Dan, we'll be back very soon, probably after Thanksgiving or so. I always appreciate your time, and this has been great.
Yeah, thanks, Fabio. I just shared some small information I was meaning NVIDIA here, but just take it with you what the unusual flow is telling us, what I had written down. And if you have questions, please tag me in the Discord. I'm happy to answer and happy to be here again, Fabio. And see you soon, guys. And good luck with everything and trade like a quant with all the MenthorQ data.
Exactly. Thank you so much, guys. Have a great day.
Bye.